everyone. Welcome back to the next episode of StreamTime Sports. My name is Chris. I'm the community lead, joined as always by our CEO, Nick Meacham. Now, Nick, we hosted 3, count them, 1, 2, 3 separate events this week. So it's been a busy week for us. And we spent a lot of time talking to people in the industry. But I think sometimes, Nick, it's important to talk about the common man. And I've got 2 stories I feel like, are going to be great to start off this episode, talking to just the common person within the sports world, not the professionals, not the people managing hedge funds that we spoke to, things like that, the common man.
Well, it's always important to think about the common man before we start talking about the big numbers. Technically, we delivered 4 events, actually, because I can give context later on why it's 4. But let's jump into it. What have you heard? What have you heard on the ground? You've had your ear to the ground with the common man. Tell us more.
I have. So the one I'll start with is basically, obviously, FIFA Club World Cup is going on. One of my good friends in the group chat, he's a Chelsea fan, and he just put in a text message to the group during the semifinals. So think about, second, third biggest game of the tournament. My favorite part about this Chelsea game is the only channel that it's on is the Spanish channel. Now, I have a feeling that wasn't the only channel that the game was on, but it's absolutely a failure in the sense, my friend, these are sports people. These aren't just, people just kind of randomly scrolling through. This is a Chelsea fan. They've got NBC Peacock. They've got YouTube TV. These are actual sports fans. I'm sure the game was on more than just the Spanish channel, but the fact that was the only place he could seemingly find it shows that there's some sort of problem from a discoverability perspective.
Yeah, just a little bit. Just a little bit if someone's actively seeking out. I mean, we talk about this all the time, right? But that is a great litmus test for this stuff. If you can only find the Spanish version of something you're actively wanting to watch, I'm not even sure where it is. Obviously, it's available on DAZN, as every match is available on there. But like we've talked about, let's be real, DAZN has next to no awareness in so many key markets, let alone the US or let alone in France and other markets where they have those major sets of rights. So, let's be clear. I think it's not a surprise to hear that sort of feedback, but I'm thinking it might be it was on TNT or something, but maybe not all the matches. The problem is they've probably done some small deals, but not for the comprehensive rights for anyone else. So if you can only find a Spanish game, you're probably in a spot of bother.
Yeah. Like I said, I'm sure it was somewhere else, but the fact that it wasn't just easily there.
I'll tell you, the Spanish commentary is probably better sometimes. The emotion. Have you seen some of the highlights you get on social media?
Like I can't even do it as long. Those guys are incredible.
I think the best as I've seen, I think it's Latin American and Korean commentary seems to go absolutely bonkers. So that's the beauty of commentary, where you don't actually need to understand the language to really enjoy it. I think there's a lot to take away from that.
Yeah. Well, the other story I have, I was at the driving range. I know I've been talking quite a bit about golf, Nick, lately, but it's at the driving range. I'm up in Yorkshire at the moment, so I'm not even down in London. So it's a bit odd. I can hear someone in the Bay 2 down from me talking about being a Crystal Palace fan. Odd place to find a Crystal Palace fan up in Yorkshire. But nonetheless, they were talking about Lyon because there was the co-ownership that might potentially prevent Crystal Palace from competing in Europa because of UEFA's rules around multiple club ownership. So they were talking about that. And then it got into all screw Ligue, don't like it. It's a farmers league. It's not any good. And then his friend in the background is like, yeah, like it's not even on TV. Like you can't even watch it anywhere. Like coming up, it's not going to be in the UK. You can't even, watch it in other markets. He's like, even in France, the only place you can watch it is what's the name of that thing? DAZN. And so then at this point, I'm like, well, actually, guys, like it's DAZN. But not only that, like they actually terminated the contract. It doesn't exist anymore. So currently, at the moment, you can't watch it at all in France. Now, news has come out, Nick, that the plan has moved forward. But it's just, I was just really surprised that anyone in Yorkshire is talking about Ligue 1. But the fact that they were familiar with the fact that it doesn't have a broadcast partner, and then again, they couldn't even pronounce DAZN and DAZN's home market. Just it is weird sometimes how news just gets around, Nick.
I can't wait for the day that they rebrand that name, because I've heard more people say DAZN than I have DAZN over the years. And you think about all the name changes that TNT and HBO Max and then Max and back to HBO Max has gone through. Just one effort with DAZN would have been really nice to just sort out that. I mean, the brand looks great, the logo looks great, but they could have sorted that name stuff out. Look, I think it just comes back to this whole issue that where we're at now around sports media is you cannot just rely on the content to be enough to drive an audience to a platform. You have to market the life out of it to get it visible, create awareness, or even someone who's actively seeking it struggles to find it, particularly on platforms that are more gated than most, like a DAZN. And I still think that is one of the most underappreciated areas of sports today, is the ability just to make sure true widespread awareness, and not just trying to sell subs, but the awareness and visibility of the brand, of the platform, and getting people just to understand what it's all about, particularly because of the fragmentation of rights. If you're not actively going to that platform regularly, you have no idea that that's a viable option if you're constantly going to a Sky or Warner Brothers Discovery or TNT Sports, I should say, in the UK. So I think it's still hugely underappreciated, no doubt under budgeted in many sporting platforms, using a very legacy model of, well, it's on the main platform, people will find it. And that's not the case anymore.
No. Well, like I said, when I made that comment, I had said, well, you can't even watch it in France because DAZN is canceled or terminated the contract early. That news has been updated, Nick. We at least have some formal plans. Last time we spoke on this topic, we were sort of like, well, we're 6 weeks away from the season. What are we going to do here? It does seem as though there finally is a plan. They've rolled out they're going to do it, Nick. They're going to do the D2C thing that we've all been maybe not hoping, but have been interested to see as a great litmus test to see how something like this can exist. We've got pricing on it. It appears to be basically the same amount of games that DAZN previously had and will still be able to broadcast a live game on Saturday. But I suppose the one major difference is the price, in the sense, I believe, to my understanding, it's basically half the price. If you pay for the full year subscription up front, I think it goes up, which would be about 15 euros a month. I think it's 20 euros a month if you pay it on a monthly basis. And there's also, despite the fact DAZN is not there, my understanding is, Nick, that DAZN is going to carry this as a linear channel, and they've got a few other linear partners. They're going to help with the distribution, but they are going to go D2C, Nick. So we've been talking about it. Writing's maybe been on the wall a little bit, but it seems as though we finally have a concrete plan.
Yeah, let's be clear on. I'm pretty sure they won't be broadcasting through a linear lens. They'll be distributing it. So basically, the platform will be available on DAZN. This is what my understanding, that the platform will be available, but it won't be through and available on DAZN's linear output. It'll be available in the same way the Game Pass International effectively is. And those other places that it'll be available is a distribution thing. So they are distributing the product, not having games live on the platform, which is still a very risky game for Discovery. We just talked about Discovery, right? Like if the games are only going to be available behind the paywall, now they've gone the approach here. What's unique about it? Well, there's a few things that are unique about it that many have covered and we've covered, but the few things that are really clear that are unique is it looks like for now that everything is behind this paywall on this special dedicated product. Maybe bar a few games with BN. I think BN might have some games, but the price point's way lower. So instead of having a really hard to bypass or hard to justify price point at 15 euros a month, that's much more palatable for anyone who's even a mid-tier fan. They've also gone with this lower price for under 26 year olds, which I think works out to less than 10 euros, or about half price, less than 10 euros a month, which is a really interesting ploy because I've not seen that. But naturally, what they're trying to address there is the piracy issue, because the younger audiences are no doubt the ones that are most prevalent in piracy, because they're the most technically adept at using those sorts of tools. So interesting approach to go down that direction, and to see if that price point gets low enough that actually, for 10 euros a month, I will just pay the subscription rather than pirating it, actually, depending on how difficult they're able to frustrate the pirates of making it more difficult, because we know piracy is so prevalent there. So it's a bold move. They want at least 1 million subscribers year one. I think the economics looked like they needed 2 million. The DAZN needed 2 million to justify the rights, and they weren't even close to getting 1 million from what I understand. So they've got a big hurdle to jump. They brought down that barrier. So, it's going to be a good test for us. They don't have the Canal Plus distribution, so they still haven't sorted out that relationship with Canal Plus. I had this picture in my head, right, where there's a lot of legacy political stuff that's happened over the years. The LFP burned the bridge with Canal Plus, and I kind of had this almost like Godfather-like moment where LFPs come back to Canal Plus and said, we want to come back to the table with you, and they're like, kiss my ring first. But like, basically, if you kiss your ring and say sorry, then we can start talking again. And no one's willing to do it now. I don't know if that's the way it goes, but I had this vision in my mind that it's played out like that. So, interesting to see the low price point. They had to do something different to what DAZN had done, clearly. And I'd expect to see Amazon come to the table with a distribution deal. Basically to give them more visibility, given Amazon has had a presence in France for some time.
Who knows? Maybe it'll be Netflix. They did the deal TF1. Maybe it'll be Netflix.
Well, one thing I think hasn't been really covered well, and I'm not quite sure why, but the Endeavour Streaming is basically the one who's doing their broadcast product, or sorry, the OTT product in the UK, and I've heard that they will be also doing it in France for them. Now, Endeavour's, the main thing they have to do with launching an OTT product is you have to get it right? As we've seen what happens in other markets with DAZN and alike, and not getting it right day one can have all sorts of knock-on effects. So Endeavour Stream, from what I understand, is going to be the ones delivering that product. That gives them a lot of surety. That means that they can connect up a lot of their technology with what they're using already in the UK, even if it's not the same product externally. So that gives them a bit of confidence, and they're in pretty good hands probably with Endeavour Streaming out of everyone else. What's been quite interesting is they've gone with a media production company I've never heard of before, which it looked on paper as someone who hasn't done this sort of scale of production. So that is more the interesting thing here, is they've taken let's say a different approach to, rather than like what the MLS did with working with Apple and having to take on the production themselves. They went with the best in the business with IMG and NEP to do that. It doesn't seem like they're taking that approach of working with someone else. So I just know when you have more stakeholders, more moving parts, and you want to do it yourself, more can go wrong. So my fingers and toes are crossed for them to get it right, because they have to launch very, very soon. I don't know when the kickoff of the season is, but
August 15th.
So they've got not much time to get it all together. Then they've got to market it. They're hoping the distribution deals are going to be significant enough for them to get good reach. So time will tell. I really hope it works. But I still think they need to, and will work out eventually, some extra deals with linear partners to get more visibility on games outside of this OTT product. But let's see.
Well, the way I'll segue this, Nick, and I think it'll be quite logical, is we'll talk about our investment summit. I mentioned we did 3. You told me it's 4. You'll probably enlighten me as to what that is. But we did have our investment summit, and I'll let you talk a little bit more broadly about what that investment summit is. But that, the segue I would say is, be interesting to see what impact this has on Ligue 1's media values. I hosted a session at our investment summit that we'll talk a little bit more, talking about how to drive the value of media for investors. It was largely more around non-live, because we kind of know the NFL is really popular, the NBA is really popular, the Premier League is really popular, and that's pretty easy to understand. But more, what are the other content formats you can build to drive value? And there's a really interesting example about just Change Your Sport, which I'm sure we'll use as an example to do that. But maybe we'll see how this impacts Ligue 1's finances for potential investors in the future. But, before we dive into that session a little bit more, Nick, because it is a new event, probably had a bit of shorter runway than some of our other events, just maybe talk a little bit more broadly about that investment summit that we hosted, as well as the dinner. And maybe that's the 4th event in there that I don't know about as well. We'll see.
Yeah, the difference is that the other event is the investment dinner that we ran. The reason I count that as a different event is we are not necessarily attaching them to each other. They are standalone themselves, but we wanted to do it this year to leverage the investment summit taking place where it was and the types of people we'd be having in town for that event. But we are keeping it as a sort of a semi-standalone, because we'll also be bringing people in from other corners who may not be attending the conference. So technically, there was an extra event in there. But no, what we wanted to do with the investment event is, obviously, we are pretty strong as a business, I believe. We're one of the strongest, not the strongest in the world on covering the media space in terms of the events we run and the content around it. But one of the areas that everyone is interested in right now is investment, whether you're a rights owner trying to understand how to tap into that space and potentially use investment to grow, or just understanding whether it's financially worthwhile really to do it, and hearing about some examples that have been successful and a lot that have been unsuccessful. Just that whole economy around investment is a hugely developing and growing area that everyone in the sports industry is trying to come to grips with. Not like investment's new, but it's still only maturing as a real heart and soul core component of the financing of sports. So that was why we were keen to do this event, and we wanted to get our flag in the ground now. We think it's an important area that we see content and at our other events where there's huge engagement with. So we wanted to have something that was just for that sector of the industry, not just about educating the wider industry, which is what our media channels and our bigger events do, but this one is to bring investors and people seeking investment or wanting to learn about investment actively all together in one place. And we took a different format. We made sure that the event was a single day because time's precious for the conference itself. We wanted to keep it focused really about hearing mainly from people who are investors, but also in this instance, some people who have actively had investment and what they've done with it, which is what your session around the media side was really interesting. And it was great for us because also it was a new way for us to see what the appetite like was for investors. What I had sort of envisaged is basically investors would come to our event and they would try and hide away because they wouldn't want to be annoyed by people trying to pitch them stuff. And it's actually the opposite. They were really open to talk to as many people with as many people as possible because they want to get a feel for the next big investment opportunity, big or small. They're quite happy to talk about what they like to invest in and whatnot, and talk to from everyone from startups through. And just they understand the value of building relationships for whether it's something now or in the future. And so we kept that event intimate. We didn't want it to be a catch-all where you had every Tom, Dick, and Harry in the room, but to be focused around that group. And it really paid a lot of dividends for us because I think just gave us a greater sense of the investment market. The content, I was also afraid that investors would be too afraid to talk about specifics or about the numbers, and quite actually, that was not the case. They were much more willing to talk about scale, revenues, things that were good, things that aren't so good. It wasn't all just bells and whistles and all positive. Although maybe the 100 session was a little bit funny on that regard, which got some headlines. But overall, it was a really good experience for us to expand our audience further, to double down on that space, and really put a flag in the ground. It's basically the only event that's a true conference style event that is positioned solely around the investment space in sports. And we're going to be doing something in the US in the near future as well. So we're quite excited about that.
Yeah, well, it was a real learning day for me. You know, I made the comment on the ground. Usually I go to our events, I know all the rights holders, I know all the leagues. At this stage, I'm pretty familiar with most of the vendors. You get the startups that'll come up and surprise you, but I know Delta Trey, I know WSC, I know all those don't, surprise me the way they used to. But I spent most of the event being a little overwhelmed. I was like, I don't know the names of all these investment companies. And I didn't want to go up to someone that's, managing, $50 billion worth of assets and be, oh, hey, what do you do, buddy? And just realize so yeah, it was definitely a day for me to do some learning because it's not our usual audience. There were some of the rights holders there that I know, but a lot of the people that would have replaced the vendors, that usually come to our events, it was a lot of me having to figure out some new names.
Yeah, definitely. Look, I think what was interesting, I was a little bit maybe less afraid of that. I was just happy to ask people what's your approach to sports? And sometimes you get, we look at, investment tickets of 2 million to 5 million in startups. And fine. Yeah, that's pretty stock standard. And, manage a portfolio of $5 billion in assets. Oh, okay. That's quite a lot of money. But what was really interesting in some of those conversations is I heard consistently from people either in the investment space, as in investors themselves, but also people who are around the service side. So lawyers, the people, the bankers, so the merchant bankers, basically people who are connecting the let's say the investors and to opportunity. It is an insane amount of money that is not being deployed in investment circles. So basically there's an issue with deal flow, and deal flow being basically the actual deals happening. There's all this money ready to invest, and you see all these announcements of there's this war chest for people to go out and buy teams and clubs and competitions and set new basically new service providers and alike. Yeah, the activity's not aligned with that sort of money. And what's going to happen soon is that all this money that's sitting in the bank ready to be spent and not accruing interest in some instances, just sitting there ready to be deployed, is going to have to get paid back to the investors soon because it's all very cyclical. So I learned a lot about, and there's more I learned, which I could go on about, but probably not the right platform for it. But basically, we could see a real influx of investment coming soon. But then you have this other layer, and the layer being an investment being in teams and leagues, but also in media platforms and service providers and basically every corner of the industry could really pick up momentum. But then you couple that with the global uncertainty about, are we going to be in a global war soon? What's happening with the US and interest rates and the Trump effect and all these things, and this layer of uncertainty has a massive impact on what investors, like serious investors, are looking at doing with their money. So you have this real tension point. Now it's a bit of I think it sounds like and feels like, no one said this, but it felt like there's a bit of a calm before the storm. So there's a little bit of uncertainty. Everyone's trying to work out where we're going, and they're providing a world war doesn't break out and the like, and further uncertainty doesn't come. You could expect a real influx of deals coming to the market right across the industry. So that was the feel I got from some conversations, but also there could be some oh shit moments coming, as in basically organizations that have been invested in haven't paid up or haven't delivered results. What's going to happen in those instances? You could see investors basically wanting their returns and money back earlier because nothing's been happening. What does that lead to? Lots of weird uncertainty and question marks, but I do feel like it's a bit of a calm before the storm, and glad we can be a bit more closer to it, a bit more a part of it.
Oh, I love a little bit of gossip, love a little bit of tea. So we'll definitely keep following that up. But kind of shifting gears towards my session, I managed to have a pretty diverse group of panelists. Like I said, the session was titled something beyond the pitch, driving media values and sports content. So I try to drive the session a little bit away from necessarily specifically the live rights, because there's so much content that exists beyond there. And I had 4 panelists, one from Overtime. If you're not familiar with Overtime, massive platform at this stage in terms of their growth over the last 5 years. We've been fortunate enough to have Dan Porter be part of a couple of our events. Lots driven around, they talk quite a bit around community, UGC. They've even been so successful now, they've set up their own IP. They have 2 of their own basketball leagues and a 7-on-7 league. It was one of the great examples where he listed off 2 of the teams in the OTE basketball league, asking if anyone had heard of them before the event. And of the 200 people, I think 3 raised their hands. And he's like, well, if you go to TikTok, they're both in the top 10 most followed teams. You can put Real Madrid, Dallas Cowboys, whoever's up there. But just to kind of give you an idea, like, we're doing really good in this space of what we do. So their view on content is going to be completely different based on sort of, they're not competing for traditional live rights. They're largely doing it on their own, while also creating some live content themselves with their own IP. Also, go ahead, Nick.
I was just going to say, I think before we go the full spiel, I think let's talk about those companies. I think before we go into some of the stuff that covered, because what was great is, again, sometimes we talk about theory and stuff at these events, but actually here they talked about some numbers. They shared a bit more context to give the scale and understanding. And Zach, who's the co-founder, alongside Dan, was very impressive in how he talked about their approach. They're actively fundraising at the moment, but they've raised a load of money. I think he said they turn over around 100 million revenue now, which is now it's getting significant, because I wasn't sure where they got to, but he was really great just explaining not only how well they're doing, but what their challenges in the market. And I thought that was really good context before we move on to the others. And I wrote some notes down on that. I think it was interesting to hear that what they find is still really difficult. The example you shared of him, like, hey, only 2 of you out of 200 people plus know what these 2 brands are, yet they're the 2 most followed clubs in the world. They were talking about the fact that, don't believe everything you hear about the difficulties of monetizing short form content and even mid form content. They're generating tens of millions just from those alone. And they're able to generate tens of millions out of merchandise sales off the back of that visibility on short form. So their thesis or their message is actually they're already doing it. That's the underlying challenge the whole industry is telling you. They're growing audiences, but they can't turn it into anything. Well, actually, they have found the right approach there. So I just thought that was interesting. And then to couple that, but their challenge then is to turn that even into further revenue, because they have to do this whole education piece to explain, trust, like you can't just say trust us. We've got 2 of the best 10 clubs that you've never ever heard of that are doing well, and they have to go through this whole education process of educating the B2B part of the industry on who they are, why it's significant, the numbers are legit. here's the proof of concept here. And that just takes a lot of time when you're trying to raise investment, you're trying to drive, get significant commercial partnerships, etc. And I just thought that was a really good reflection, because I think typically when we talk about sports and sports media, we all as an industry rely and talk about the more incumbents, the traditionals with their traditional channels. And here's someone who has a quasi-traditional approach, but they are doing it so uniquely, they still have to do a load of education despite the fact they're generating 100 million in revenue through the year. So I thought that was a really interesting example of the challenge and opportunity that is still facing sports, all wrapped together in one with overtime.
Well, the question that led to that was basically, and he raised this point, the average user on overtime is roughly 20, 21 years old. Whereas if you look at the average investor, you're probably talking 40s, 50s. And to your point, how do you communicate the value of that? Because like I said, when no one actually is aware of two of your biggest assets, do investors look at you the way you think they should based on what those properties have? And I think to your point, he said, yeah, it is difficult because they're not familiar with that. You tell them Dallas Cowboys, they get that, but they don't realize the Dallas Cowboys have less TikTok followers. And then how do you equate that with a dollar amount for investment? But yeah, he said it is difficult trying to explain to 40, 50-year-olds why something that 20-year-olds are into is a valuable commodity.
Hey, well, I'm in my 40s and I have no problem understanding. Thank you very much. No, but it is an interesting point, right? There is that knowledge and understanding gap. And I'd be shocked in this day and age, though, if you're talking to a middle-aged investor and they don't understand that they don't understand, that there's a knowledge gap they have to overcome. If they don't, that's a pretty ignorant way to look at this space, in my view. So that's not a knock on overtime. That's more a knock on the investment world, which I'm sure there are people like that who think they know it all, and the reality is they don't have a clue. No, I mean, look, overtime's now been in the market for like a decade now. Been around for so long. I think they still have the line that he used is something like 5% of the NBA's active players are invested in the league. Now, I wonder if that's one of those situations where how real is that investment? How much is invested? Is it significant? Is it anecdotal? I don't know. And my guessing is it's more anecdotal because I like to be able to say that. But nevertheless, you still have to get them to commit to it. And that's still a challenge in itself. So anyway, I don't have to, it's not just about overtime, but I just thought theirs is a really good example. I want to read through the transcript and actually watch it back. There was so much stuff in there. We'll dig into that a bit more. And I want to keep going. There's a few other interesting parts to it, but it was really interesting because all of them talked numbers a little bit more, which was nice and refreshing.
Well, just before you talk about investors, one of the questions, how do we raise investment? And, Zach gave the answer, our first investor was David Stern. That sort of helps. That kind of helps when your first investor is, the commissioner of the NBA. And, it's not to say that they haven't had struggles or how to do more of it. And you made the point about, 5% of the NBA players, but they're like, when your first investor is David Stern, it's
a good starting point.
It certainly helps with the leeway of getting other people on board to say, hey, David Stern's into this. You should probably be considering it too.
WSC was similar. I think David Stern was one of the ones. And then they used that story throughout, and it clearly works. And if you look at the cap table that Overtime has, and they rattled off some of the names, and they are ridiculous, like Liberty Global, Andreessen Horowitz, 5% of the NBA. I think Jeff Bezos is in there somewhere at some level around. It is ridiculous who's who. And he was basically saying, quite frankly, if you get good names, they do follow each other. And that is, people want a piece of the action effectively. That's what it's all about, because investment is a bit of a gamble, and you trust other people's names who are investing, and you don't want to miss out if one of your competitors is probably successful. So yeah, that was an interesting anecdote, but not surprising, but just interesting to be called out like that. I think was interesting nonetheless.
Yeah. Well, the other one was Dream Sport, and we spoke about it on the last podcast. Those that aren't familiar, Dream Sport being based in India, have a heavy presence with cricket. We just talked about the just incredible numbers that are taking place in India. And one of the quotes he had, one of the statistics he had, which he mentioned in our pre-meeting and then brought it up, in India, I believe he said there are 18 million people per year that are turning 18 years old.
Yeah. So I think it was about 18 million. Yeah, which is that's almost the size of Australia. It's 75% of the entire country is turning. Was it? What was it? What was the age window? Sorry,
18.
Yeah. Wow.
Yeah. So like when you're just talking about like growing audiences, when and they're one of their big things with Dream Sport is Dream 11, which is a fantasy sports and fan code, you know 18 kind of get in that fantasy sports place. So they're just talking about just the sheer size of India already that they have to work with, and the fact that every single year an Australia-sized portion of the population is coming into an age range which they can target. It's quite a phenomenal statistic.
Yeah, actually, Australia's probably not a good example. Probably the Nordics. Let's go with the Nordics. Is probably closer to the mark because Sweden 10, Norway about 5. Yeah, we'll go with a bit of the Nordic region. But yeah, those are bonkers numbers, right? So if you've got a product that is purpose built for younger audiences, you're in a great place. What was the other study used? Like 10. They have on Google search they have 10 times the amount of searches for fantasy sports. 10 times more for Dream 11 than they do for fantasy sports as a search term.
Yeah.
Basically coining that they or have cornered the market for fantasy sports in that space. No, what was the guy's name from Dream Sports? He was great. I thought he was really impressive. Raj, yeah, he was really on it and very clear. They really seem to be on it with their approach. And we talked about them previously in recent episodes around their investment into Flow Sports. I love the anecdote he gave about that. There was 3 things he talked about when they're looking for an investment, because it's really interesting to see an Indian-based platform, a media company, diversifying and investing outside of India. You haven't seen a lot of the examples of that of late, but there were 3 things that he said to their approach. One was that they have to be adding value to their existing audience in India. They have to think they can add real value to their investment. In the case of Flow Sports, that was definitely part of that. And there was a third, which I can't remember what it was. I was meaning to look at the transcript before this, but I didn't have time. But he talked about that marriage between they've been all focused on product for so long, which means they've got a really good product and platform, but less about the community aspects. And that's what Flow Sports have really done. And they saw that as a really good marriage of their tech expertise and their ability to build and harness an audience in a different way was, I thought, an interesting approach. The other thing I loved from the Dream Sports side is something I bang on a little bit, which is a bit more controversial to some people, is they are actively not interested in a 5-year business plan. He basically said, we only look at the next 12 months. We want to be as accurate as we can over the next 12 months with our planning and projections, and aren't too focused on longer term. They're more worried around direction of travel and momentum and being accurate in the next 12 months rather than that longer cycle. And that's something I say a lot in the business, because I've seen too many people talk about 5-year plans or even 3-year plans. And we had that last year in our business where we had a great year, our best year, and it happened completely differently even then to what we had projected. So getting too far ahead of yourself in this world is a risky game to play. But I like the fact that they were advocating that they don't look at it for their investments or for themselves.
Yeah, and I mean, Dream Sport, he talked about they did their own investment round. I think maybe it was 2021, 2022. Massively successful, continuing to grow, year on year. And I think to the point, maybe some of the differences, and you kind of touched on what their Flow Sports stuff is, unlike some of those other businesses that are up there, they're actually actively investing. So they've almost gone from the point of, seeking investments, and now they've been so big, so successful. They're on the other side looking for things. And you mentioned it, talking about the community side, but even they reference like the niche sports is something, that they want to be able to tap more into. And that's where Flow Sports is really good at it. And, we were speaking to Mark, it's not necessarily because I think India is interested in, college wrestling or college athletics, but it's more, what are the products you're delivering? And Mark spoke about that quite a bit of Flow Sports is we just have to build a product that is so damn good that like people are willing to pay the price for getting some of those niche sports. And that's what they spoke about at Dream was, there was a community piece, but also, they want to do better at tapping into sports beyond cricket. There's more for them that they need to be able to go after. And yeah, they seem to be doing okay for themselves.
Yeah, they're in a good place. And there is definitely a thesis, a bit like the Dine model of servicing and servicing. I'm going to start that again. Surfacing and servicing. I can't say that 10 times fast. That underserved audience and underserved sport is such an opportunity if done right, if executed well, if the costs are low, and if you can get the top of the funnel really nailed on, then I think you've got something to work on. But obviously, Dine's done that well. Flow Sports has done that well, and they're getting some scale. They're not in the billion-dollar game yet, but at least they've proven out the model, and it should be scalable. The more sports you find, and I imagine in India, talking about the growth of the audience there, I could just see that in a few years that the NBA gets a bigger foothold. That's a great and obvious sport where could ride those coattails of audience growth and younger demographics through to something quite meaningful for a media partner.
Well, between you and I, Nick, I spoke to Raj after. I was like, we need to get someone on just to talk about the Indian marketplace for us because it's phenomenal. So whether it's him, whether it's someone else in the business, we're going to get someone in here to just talk to us about those absolutely just bonkers numbers and like what that means for everybody else, potentially those on the outside trying to figure out how do I get a piece of that cake.
Oh, absolutely. I mean, our last guest who was covering the India market's now being promoted to not promoted, but taking on the job of chief executive of cricket internationally. So fair play to Sanjog Gupta, who's taken on that role. He's an impressive guy and has a big responsibility now, which is much more diverse, I would say. I mean, he had a pretty big role trying to manage the live, the broadcast of the biggest sport in India to hundreds and hundreds of millions, but now he's got to deal with all the political aspects of cricket to come. So good luck to him.
Good luck to him. The next guest we had on that panel was Sam Sadie, who's CEO at LiveScore. And, they're interesting. They're 26 years in the business. So they are still going through their funding rounds. I think their most recent one, I think he said they raised around 100 million back in around 2022. I think that's what the numbers he said ended up being around.
Oh, I've got a lot of numbers in my head. I've got different numbers I've written down. So I thought I heard something about they raised maybe 50 million at a $500 million valuation at some stage, but maybe it was 100 million. It might have been 100 across all the raises, and maybe 50 million was the last raise, perhaps.
Yeah.
But it was a lot of money nonetheless. But he was impressive and very forthright about what works and what doesn't. And he's hard to argue with. I think he's got some really good points about the sports media landscape.
Yeah, well, I think the point is I was trying to make there is that they're 26 years into the game. So they're not someone like Overtime who kind of picking things up quite quickly. They've been around for quite a bit, but the business has had to evolve in some of the new things that it offers. And I think probably one of those bigger spaces is they've now got into some live streaming. They've been very specific about which things they choose. They talked about Ireland as a specific example. We actually did a podcast with Sam, and we talked quite a bit about that one. If you really want to go through the archives, talking about sort of how they've managed to attract a lower level, I don't want to say lower tier property. I mean, UEFA is still UEFA, but there's no Irish teams in the Champions League. But it was specifically, my understanding, Nick, was the streaming rights for it.
Well, it was actually it was basically the broadcast rights. There was just no competition in the market. Like there was just no appetite for someone to go and buy the rights. Sort of bit like France to some extent, in terms of like only a couple of viable bidders for it. There was no one really actively going after them, so they wanted to prove the case at that time, which is we can broadcast this for free on our platforms and still turn that into revenue through marketing and advertising and betting, which is their lifeblood and their backbone is driving revenues through those other means. And I've talked to Sam a few times, and the feedback is that worked. There was a successful approach. They were able to monetize it effectively, but then it wasn't worth them continuing to buy those rights because it was a marketing play, right? It's a marketing play to get people to use the platform, and LiveScore is really a global platform. For those that aren't familiar with LiveScore, it's more of it's got a lot of layers to it, but how would you describe it, Chris? It's probably more like it's got all the information you need. It's not about the live rights. It's not about highlights. It's about all the content that happens around the sport. Think maybe ESPN's app or OneFootball probably is a good example of it.
That's where I was going to go with it.
Yeah, that type of platform where it's a mix of interesting football and other sports related content, not just about live or non-live sports, but they have different layers to it. And one of the main ways they've been driving revenue, and they have betting valuable on the platform, if I remember correctly, as well in certain markets, is through betting, and they're very good at monetizing that. And Sam would argue that they're the best in the business at turning audiences on their platform into revenue for the company, which has made them so successful.
Yeah, and I thought actually one of the most interesting comments he had wasn't even necessarily around LiveScore. One of the questions that came in from the audience was, I work in an Olympic sport, well-established, but I'm
Yeah.
struggling to create any value from it. How do I create high value assets? And, Zach gave probably a bit more of a political answer about, kind of the way you target things, the type of audiences, platforms, stuff like that. And Sam was just really blunt. And he's like, you can't, you won't. And sort of his argument was you need to be really honest with yourself. If you have an existing asset that isn't producing, you're not going to be able to just magically make it valuable. And, he made the point of you got to look at yourself and how do you change things. And it was interesting having Dream Sport there. There's so much value around cricket. The perfect example there is going from test match to T20. And he's like, if that's actually what you want to do to produce value. And I think that it was a good segue in the conversation because, there's people like, how do I become more valuable? And he's like, yeah, you're not going to, at least not doing the same thing you are doing. And I just, when he said it, I was like, oh, that's a punchy comment. But then I was like, actually, it makes a hell of a lot of sense.
I think it makes a load of sense because anyone who's trying to turn an Olympic sport but use the same approach or try and wrap something, what a sheep in wolves' clothes or whatever the saying is. Is that the right saying?
Sheep in wolves' clothing, yeah.
Yeah, wolves' clothing is basically that it won't work unless you really reinvent your offering. There was another line he used which was similar but referencing his own organization, which was that he has to make sure his engineers numb their feelings when it comes to what good looks like with the platform. And I think that's a good sort of sentiment for the sports industry as well. It's like numb your feelings about the sport and what looks good. Just look at what works instead and try and focus on playing that game, which I thought was an interesting approach. But they seem to be in a good position. They've raised a lot of revenue, raised a lot of investment. And what was interesting about his thesis around that is, again, my point about Dream is that not about the 5-year plan. They were more about, or Sam was talking more about, hey, here's what we've done. Here's our pedigree and track record. Trust us, back us. And that's their main thesis, less about they're going to grow this enormous business 10 years from now. Just trust us to keep growing and heading in the right direction because we are doing so already, which again, it shows that track record counts probably more than I think people most expect, particularly at this sort of scale. And he was talking about the fact they're now at a certain level where they're almost like too big to just be mopped up and acquired by anyone. And it sounds like they might be actually looking to make some acquisitions themselves to keep growing the business from what I heard. So very interesting business. One of those companies that is actually quite significant in scale, probably not given the amount of visibility or awareness it deserves given its audience reach, its revenue generation, the fact it's done it through mainly non-live rights, and it's done it through betting in a very complex landscape. Like betting is the most complex market of all to turn into hard revenue. So he's always impressive to listen to, and I think they're an interesting journey to follow.
Yeah, well, like you said, shameless plug. Go search Live Score when you go on Spotify, wherever you listen to podcasts. We'll have a get more in-depth conversation from Sam. And then the last one we had was Dougal McDonald, who you had the chance to speak with at SportsPro Live, CEO, co-founder at Sportable. And I think the interesting part for them, they're probably not nearly as far along in their investment journey as some of those other businesses. But I think the other interesting side of them is they probably are a tech-first business in terms of, what the product actually is and where they initially started, selling their product to teams, trying to, here's tracking data, using it for performance. But what we've started to see in recent years is that actually becomes super interesting data from a media perspective. When you think about people like myself who are super into fantasy sports, want every particular piece of data that I can find, how fast is the pitch spinning out of the pitcher's hands, what's the exit velocity like. There's a ton of stuff that people actually want, and data itself is becoming more and more more and more valuable. So I think they sit in an interesting spot that, they might be started off as a performance tech business, but they're actually slowly finding out there's a lot of value from a media perspective when people are now trying to acquire data rights.
Yeah, they are a tech business. And I think he said they spent 4 years in R&D before launching, which is an extraordinary amount. But if you spend that much time on it, you come up with a really good product, and they've raised something like 25 million to back them. So they're not on a shoestring. They have invested and looking to continue to grow, continue to raise, and continue to scale. But yeah, the way he talks about it, I think is really good. He talks about basically talks about the business and use cases of the data, which is clearly there is appetite for data. We all, I think everyone understands that. There's both the educational aspects of understanding a sport better and just also feeding more people at the pointier end to give them more content to consume. I mean, think about golf as an example. I noted, by the way, you haven't talked about my pictures behind me yet. Finally got my setup here. Got Tiger Woods here, one of the first covers of SportsPro, and my old hero Greg Norman in the corner there, the Great White Shark. But on the golf side, there's a whole host of data points now that are actually become part of the conversation, both at a leisure level and at an elite level. You know, things like club speed, ball speed, spins, revolutions, etc., that sort of stuff. All the tracking data that comes with that. That just did not exist 5 to 10 years ago. Now it is people know what is a good club head speed and what isn't, and the impact it has. And it blows my mind, right? From all the years I've been playing golf now, and I'm trying to get my head around it. But my point is the depth it adds is really interesting when it transcends watching sport at an elite level to give you great understanding, like in the case of F1 and all the data you can get around pit changes and on-track performance, to when it impacts the user, the customer, on a personal level in the way they participate in sport. And that seems to be where Sportable's coming to life here, is like creating products, creating content that aid performance at a personal level, but also is stuff that you can use both in content and to make your performance better as an elite athlete. And I think that's just a really interesting spot to, if you can get that right, sort of apex, that right, I know, triangulation of data, which obviously they're very much focused on ball tracking and the like, is a really cool place to bring to life.
Yeah, well, one of the questions I asked him and asked the group more generally, be curious your take on this as well, Nick, is it felt like, and this is just outsider's opinion, my own, there used to be a lot of talk about investing in, that unicorn tech business that was going to take you to the moon, stuff like that, buying Apple before it's Apple. But it does seem like in recent years, and perhaps this is because it's people like Barcelona pulling whatever levers they can to stay afloat. It does seem like there's more investment in media rights than maybe there was in that same time frame. And whether they felt, as a tech business, but also doing some media stuff, whether they thought, investors viewed media more attractive than it used to be, how it compares to tech investment. And I'd be just curious your opinion, Nick, just sort of what you see on the outside, what you think that sort of relationship is, where the differences are between tech investment versus media investment.
Well, it seems like I feel like media is in a bit of a crossroads with that. I feel like actually I asked one of the questions you asked the the panelists, which was the one around the value of media businesses, because my theory is that they're actually undervalued if you incorporate not just the hard returns that a media business generates, but also the influence and impact. I've got some personal examples I can share about what happens when we publish things, if it's in the right place or positioned the wrong way, the impact it can have positively and negatively to someone's business. Like media has this extra layer of influence that I think is sometimes lost on some people. So it's important, like we heard about the StreamTime Connect event came up quite a bit, is the importance of basically having more than one way of driving value out of that content, i.e. not just through programmatic ad revenue. Can you achieve an objective or another revenue stream off the back of that same piece of content to make it worthwhile doing? And I still think media is now fall into this little dip of being undervalued in terms of its impact. And if sports is in a place where the theory is that sports is just going to work out how to drive more value to it through direct-to-consumer and technology advances, then media should be the same. Now, I'd say that the catalyst or the challenge there is that, all right, but then you've got the creator economy coming, you've got YouTube democratizing everything. Maybe it's at a crossroads, but I just feel like the media industry will work out how to address that problem in the same way, perhaps like, maybe podcasts were being wrapped, were positioned as independent titles, but we're being wrapped together in wider media outlets. Like maybe there's some way that's going to come to the fore rather than a lot of independent outlets. But I feel like media's got a lot more legs in it. Tech's value for decades is being probably over the odds. And actually, what you hear, I think the number I heard from someone was like 90% of startups, particularly tech startups, fail. I mean, So that tells you something, right? When particularly expectations are not married up with realistic revenues or realistic projections, that more businesses fail than not. So yeah, maybe valuations are higher in tech, but the risk is for failure is much, much higher.
Yeah, and those guys are all obviously very optimistic. Zach, from an overtime perspective, they're continuing to grow their own IP, and just where they think that business will go as it grows up, things like live score, it's really crazy big. Like I was talking about this with Sam, like betting's still not even legal, like in all 50 states in the US. And that's not even including some of the big ones, like, like Texas, California, stuff like that. And like, even though we've talked about the impact it's already had, like it's still potentially could just be scratching the surface there. India, talk about how many people are entering an age with which they're more likely to have income to spend on sports. And then, we're just talking about all the stuff with data from a performance side, people wanting more of that. They're all very optimistic. They're headed in the right place.
And betting is still illegal in India. So there's imagine if that opens up the floodgates. Gosh, could you imagine the influx there of excitement from the industry if that ever changes? Yeah. Will be interested to see that journey. So look, I'm still buoyed about where media businesses can go, how they can drive value. But we all, we all as an I run a media business, although much smaller in scale than some of these organizations. We all have to keep innovating and finding new ways to approach it. And almost every single organization we've talked about today and everyone we talk about on our channels has had to pivot or change approach because of dynamics within audiences, because of macro changes, etc. You can't just play the same playbook and expect it to just magically work. So as long as media keeps evolving, keeps finding different ways to approach it, keeps balancing the right diversification plus doubling down on certain areas that are working, then I think it's got a really rosy future. But it's not as black and white as perhaps some think about, that there's all doom and gloom for media. I think there's plenty of runway still in it.
So you just referenced in your answer there, Nick, our StreamTime Connect event. And, for us, we maybe give a little spiel on StreamTime. If you're listening to the podcast, hopefully this isn't the first one you've listened to. We're very quickly coming up to 200 episodes, which is mind-blowing, Nick. But we have built a community off the back of that, Nick. But maybe let's highlight the 200 episodes, Nick. I see you just want to celebrate that moment with me.
When you told me that the other day, I had lost track completely about where we were. And the show's evolved a lot over time. It's been a really fun ride. I don't want to get too nostalgic because we'll probably get nostalgic for the 200 episodes. But I think it's really cool that we're now in a place where we can expand what we talk about on this podcast, but also still have a lot of value to the audience we're attempting to serve with this content. We're not trying to serve everyone. We're trying to serve people who work in sports media. And it's really cool that we're able to bring that to life as part of this new membership community that we're really excited about. We actually want to keep building and expanding that. At the moment, it's very much focused on these different types of events-based activations that we're doing. I'm really keen to try and focus on what else we can do from a content perspective. So if anyone does have any ideas of things that they think that we should do, whether it's just more exclusive content, more of the same, whether it's something else that you think is underserved or undercovered in the industry, we'd love to know what you think from a content perspective that is missing from our industry. But it's really cool that we can bring these types of people together at events like the StreamTime Sports Connect event, and we've got a couple more coming up that I'm really excited about as well.
For those of you who didn't see on LinkedIn, we got to host our first one at Snap. Absolutely incredible offices. Got the chance to try on some of their AR goggles. I've not really got to wear anything like that before. I think it's still a case of really interested to see where that goes in the future, what sort of abilities those have. But it was a really great place to host. The venue was lovely, well catered to what we wanted to do. Some breakout rooms, had a number of different broadcasters there, leagues, teams. But one of the things we focused on, Nick, or primarily focused on, given we were at Snap's offices, was around non-live content specifically. And you and I got to moderate some of those tables. And that was really the key point of the conversation. And as you mentioned, we'll do different content at different events, focus on different things. But what were some of your key takeaways, Nick, from your group with the conversation around non-live content? Because like we said, we quite frequently always talk about the live rights. It's the sexy topic because it's got the most zeros and most commas in the title. But we would argue, at least the example I made of my group, I'll watch 6 hours of NFL on Sunday, but I'll watch 30 hours of content on YouTube or social media. Like there's a huge gap that's not really properly, I think, in my opinion, being monetized by all of those organizations at this stage.
Yeah, it was super interesting conversation because we had so many different streaming platforms and rights owners there, alongside some of the tech companies as well, who support the delivery of that content, both live and non-live. And the theory, or there is a definitive, consistent thread, which is it's really important to have all this non-live content and this engagement on channels. It's really hard to drive it into meaningful revenue still. And this is from some of the most mature media platforms in the industry. Keep being a little bit coy because I don't want to overshare, but given it's more of a private setting. But there were some key themes and things that really came out. One of the interesting points that were made, and everyone was very vocal of supporting this, was that the non-live content just doesn't work in driving subscriptions to a platform. So, if you run docuseries content, if you run other sorts of magazine shows and the like, it doesn't do much. Even if it gets good engagement on the platforms themselves, does not drive subscriptions for the organization. And therefore, a lot of investment that went into that non-live side, trying to mimic Drive to Survive and other docuseries, has been nowhere near as valuable to those organizations as expected, in spite of a heavy investment in production efforts there. So that was an interesting point of how black and white it is, that non-live is not driving subscriptions. It is still live that moves the needle there. And the other point that I think was raised by one of the members was that basically you have to have that secondary reason. I think I briefly said this before. Secondary way of getting value out of it. Now, that doesn't always mean getting value out of direct revenue. It could be, all right, we want to engage our audience and engagement, just get lots of eyeballs, provide more value for people who are following us. But what else can we give them? So can this be a piece of content that really drives better understanding or better appreciation of the athletes or the sports rules, or is something that we can monetize through sponsorship if it's substantial enough in its impact? There's got to be like multiple layers of value being generated out of one piece of content if it's non-live related, for it to be worth doing. Otherwise, it's really difficult to justify its purpose. So I thought that was a couple of interesting points around the non-live bit. The other thing that was a standout, we talked about what platforms to use. With Snap as an example, Snap is both a platform and an AR business. So I've got a better feel now. It was really good to actually be there and talk to Callan McCauley, who is head of sports partnerships there, to get a better sense, and Anmol Malhotra, who is the global head, to get a better sense of where the business is at, because I just kind of I knew they were a bit in AR. I wasn't sure to what level. Getting a touch and feel the product was really interesting. Hearing and seeing that, I didn't realize how much of their AR technology has been used in stadia right across the US, which was very cool to see. I didn't realize that was them who were doing all that. So I thought that was interesting. We can jump into that back into that in a second. But the question was really about platforms. Which ones are the ones to focus on? It was consistent that everyone is focused on YouTube as the number one standout. The reasons were to do with monetization mainly. The reasons being basically that they can not only drive revenue directly from programmatic and using the traditional means from that sense, but they have also the capability of selling their advertising partners directly onto YouTube's channels in a much more streamlined way than you can anywhere else. And that allows them to monetize that content much more effectively than you can on any other big tech platform. So I thought that was a very simple point. We hear a lot of that YouTube. We talk about positivity of YouTube, but that kind of gives the extra business reason, the commercial case of getting value out of it, other than just get lots of eyeballs on it through the world's biggest consumption platform, and then you'll be able to monetize it other ways. Well, actually, they are able to turn that into something right now.
Well, Nick, you know me, I love piracy. And I will say, I'm not the one that brought up piracy, but it came up from the non-live content from two perspectives. One of them was your point, which is there's not a lot of proof that this is going to, that non-live content drive subscriptions. So the argument was, from a piracy perspective, why are you trying to protect that content? You're better off putting that non-live content as broadly as you can and make it as accessible as possible. So whether or not it's even worth trying to protect that content was question number one from, your own platform perspective. The other part of it came from the highlights side of it, which is sports is so much about live and in the moment. And, they were talking about the current broadcast deals make it really difficult for non-live content, particularly highlights, where the Premier League, I think it's something like teams can't post highlights until midnight of the day of their game, or someone like BBC has paid specifically for match of the day highlights, or Sky gets first access for YouTube highlights. They said it actually creates a bit of an issue from a piracy perspective because people are just going to record their TV screens and post a highlight, but it's so important in sports to be the first to publish something because once it goes viral, they're going to go to the original source of that content. And they were talking about, we try to schedule our highlights literally the second we can legally do it, because if someone gets to it before us and starts getting comments, posts, retweets, we're not going to be the ones to get it. And they were just talking about that is an issue that takes place at the league and broadcaster level because they're so strict about when highlights can be shown. And not surprisingly, WSC used the reference of the NBA basically opening up the floodgates to allow their highlights to be seen. They viewed it as a positive to have that engagement. But it was interesting that piracy did come up. One of them, is it even worth protecting non-live content? And the second one being the structure of deals that rights holders make with the broadcast partners on the exclusivity of highlights also makes it really difficult, particularly when people can just post whatever they want on social media.
Yeah, I think highlights is a really interesting part of it. That came up a bit in ours, not the piracy bit, but the highlights side definitely did. One of the members is for our StreamTime. I will mention some of the people. I think I could probably be more flexible than I was making out, but I think I want to protect some of the rights owners who have to be a little bit more cautious. But Spork is one of our founding members of the group, and they do remote commentary basically, and they were just talking about the now growing demand of multilingual sets of highlights. And so he painted a great picture. Michael Prendergast, I think is his name, who's the co-founder there, who basically talked about the fact that they kind of sit in a workflow now. So where those highlights, depending on what league, different leagues have different approaches, right? But let's say I have a league, the rights get basically distributed to them. That gets fed to different commentators of different languages. Then they create dedicated commentary for those languages, for those highlights. So it's not just cut out of the full feed. They actually are creating effectively dedicated commentary just for the highlights themselves in multitude of languages and then distributing as quickly as they can. And then you're working with your WSCs and the like to bring that all to life. But ultimately, it means that you can get, again, way more value out of the highlights even if one provider can enable all of that and make sure that that piece of highlight content is available in a multitude of languages. That gives you the mass reach and not just focusing on English alone. So I thought that was an interesting approach to it all, and that they're tasked with driving near live, right? So in many instances, not all instances, but depending on rights, but so basically it's getting out the content as soon as possible once the clips are being cut. So inevitably there's some things they're looking at from an AI perspective on some of the automated commentary, but they see that as an enabler for them, not a challenge. So that was just an interesting thing. But again, highlights, more versions, more languages, getting much more exposure, particularly for these global sports properties.
Yeah, well, the highlights was one part of it, and I think it was interesting. You talked about specific platforms. We talked a bit about specific formats, where basically the argument was is highlights they serve one purpose, but they only serve a very shallow purpose, and that your other non-live content has to be the stuff that is going to drive people deeper. It was almost sort of like highlights grab the attention, but then the docu-series, the creator-led content, that's the stuff that's going to drive a greater affinity. Because we had someone from Team GB, they're talking about one of our issues is, our athletes really only compete every 4 years at the Olympics. How do you build that, because there's just simply not enough highlights to do that. And we sort of talked about the different format types and what their true purpose is, and you can't just run the same content on the same platforms for the same purposes. Defining it's almost to your point, like every piece of content has to have multiple roles that it serves, and they sort of broke it down more with the content types and which fan that it serves and how you could potentially go about monetizing sort of each level of fandom.
Well, I think that it's a tricky predicament, right? When you've seen the Olympics try to be more relevant and prevalent using the Olympic channel and other means to try and be more regularly part of the conversation rather than every couple of years for the different Olympics they run. So I know it's every 4 years, people, the 2 years for the winter to the summer. So just calm down if you think I'm
Yeah.
don't know the basics there. But whether for me, it's like whether that's needed or whether that actually provides value. I don't think we've seen probably more people take the edge off of that tentpole moment by trying to be always visible. And sometimes it's actually better to strategize, get your ducks in a row, and then hit the market harder. I think in the example, like a collective group, let's say like a Team GB or anyone who's at like a national governing body level, they maybe have these tentpole moments like the Olympics. My recommendation is do whatever you can to enable the athletes to get more access to that content, to the share and to use, because you won't be able to drive enough value for themselves, but they absolutely can, whether it's working with the right tech partners, whether it's working with the right rights owners, just to make sure that you can have everyone who's within your respective stakeholder map have access to content that they can share and build the awareness that way. And then you can just focus on building up for those tentpole moments every few years and maximizing it at those moments, if that makes sense. And then you're also adding a lot more value to the athletes, because one of the weaknesses of, say, the Olympic movement is that athletes haven't been able to use their rights to that sort of level, particularly around the Olympics. But if you were to give them something to use between the Olympics, then I think you'd be reaching a whole new audience set. I think it would be quite exciting and building up those athletes in between Olympics much more effectively than just having that one moment to shine.
Yeah, and I think just to wrap this, Nick, because I thought it was an interesting point you made about Snap's business, because it came up, one of the people working on the business from the SportsPro perspective was a bit like, I don't know what Snap does anymore these days, sort of who's the user base, and kind of the point we made. And then that got validated because I was also speaking to Hugo Sharman, used to be the CEO at Stream AMG, super smart guy. Was that Snap is a tech business. Yes, there's the B2C side that you see with the filters and the actual app, but they're also using their technology on a more B2B scale. And Hugo, apparently one of the companies he's now working for, is a stadium-based business. And basically Snap is taking those features that they're using on the B2C side, but now distributing them or providing them to B2B services like a stadium. And that's where some of that tech comes in. It almost leads back into that media conversation we were having before, that kind of balance between media versus tech investment. And then sometimes those two things are actually complementary of each other. So I think seeing some of that stuff in the flesh kind of gave you an idea of, they don't have to be in such a one silo for those, technologies to be multiple value propositions for different users.
It's interesting, hey, their business. I feel like at one stage we're talking about their platform, which is let's call it a social media platform, which it basically is. And then there's this other part of the business which does feel very separate. Yes, there is some crossover in the use of these filters and stuff, but it feels like a very separate type of business, right? To sell the use of AR filters in Stadia and alike. An interesting part of their business model is that with some of the deals they try and do with a partner, let's say one of the major rights owners on platform, is then they share. That is a monetization share play here, that they will actually help monetization of those rights on the platform and then do a rev share with those partners, which is obviously more interesting to some people who don't have to basically have the responsibility of trying to find a way to monetize it. Snap will do it for you. But it does feel like basically the AR business should be just separated on to something else. Maybe come up with a different name or alike, and just to make it more clean and clear. I mean, now some of the numbers that Callan shared on terms of audience are pretty insane. I'm just trying to look at the numbers here quickly. In 25 plus countries, they reach 90% of the 13 to 24-year-old population, and then 75% of the 13 to 34-year-old population. I think that made everyone feel very old very quickly, considering there was only a couple of people in the room that actually had Snap on their devices from what what people put their hand up for. And there was a bunch of other stats in there which I could go into, but I thought that was just a good eye. Again, it's a bit like the overtime point, right? It's like we sit in our bubbles probably looking at the wrong platforms, but actually there's a whole host of activations and activity going on elsewhere that sports needs to pay greater attention to.
Yeah. Well, as it was reflected in that podcast, Nick, we did a hell of a lot of stuff this week. Lots of really great insights, whether it's the events, we've got SportsPro AI coming up in September. If you heard about the StreamTime Connect event, we're doing one in IBC alongside our partners at MediaKind. Sports from Madrid won't be that far away now. Like, there's all kinds of different stuff where these types of insights, and I think what's really important, you mentioned about the investment, but in StreamTime, is the connections. Like, we are doing more stuff to purposely build curated spaces for smaller groups because we recognize the value in those things. But like, if you've heard this podcast, this is just talking about a very small sample of the content that's actually taken place across those 3 days. We spoke over an hour about it. Imagine what we did if we did everything.
Well, look, I mean, the main thing I would say take away, and for those that aren't too active at going to events, I learn more from the offstage stuff than I do on the onstage stuff, and I learned a lot from the onstage stuff. But the nuance, the devil in the detail, the perspectives you hear from people who are actually doing and executing on this stuff is truly remarkable. It takes time to really process some of this stuff to go, okay, how do you use this and how does it help shape opinion and understanding and awareness of where we're really going? And that's part of our job, is to have those conversations offline and in different calls, to then be able to share that with people who are listening into this. But for our recommendation is also for those that are listening in, that if you aren't able to get to those conversations and think about it as, oh, do I want to hear what that person's got to say on stage? It is just as much the offstage stuff that is where the value is really created. And I learned a huge amount both around sports media and around investment this week. So it's been a great few days in London.
Absolutely. And it was always good to see you in person, Nick. You came over from Sweden, got to shake hands. We got to do a photo shoot, some funny faces, things like that. So it's always just, it's always nice to be in person, Nick.
Absolutely. It's definitely good to be in touch and be in person and connect with yourself, Chris, but also not only the team, but indeed just across the wider industry. And obviously London's such a great hub for that. We have an event coming up also, the AI event in September, which we'll be getting together for as well.
Yep.
And then we'll be on the road for most of it. Then if you think about it, we've got Madrid, we've got New York, we've got
we said IBC will be in Amsterdam.
Yeah. So lots happening across the world. So excited about the next few months, but it's been great.
Absolutely. Well, thank you everybody for tuning in, and we'll catch you on the next episode.
Thanks, everyone.
Now, before you go, if you liked what you heard today, be sure to rate and review, and just let me know what you think on social. You can find me on most social platforms as SportsPro Nick. And please do spread the word of the podcast. There's no better way of marketing than word of mouth, whether that be in person or on social media. And if you don't like what you've heard, or you think we should be doing more or less of something, then reach out and let me know, as I'd love to hear from you. Thanks, StreamTimers. Until next time.